Perfect. So let me record. Okay, so once again, welcome to our first accounting lesson, and we'll be looking at the principle of cash budget or cash budgeting. So I wanted to ideally take you through just a bit of a recap on the concept of cash budget, so you have an understanding of how cash budget really operates. And then, of course, we're going to look at one of the questions that I've from one of the question papers that I've shared with you on the WhatsApp group. So, but anyways, without any further ado, let's have a look at the notes briefly, at least so that you have an idea of what is happening. So cash budget operates this way. First of all, must be able to define the purpose of a cash budget in the context of an exam or a test. So we are going to look into all of that. Then, of course, you must be in a position where you can be able to draft the cash budget itself, right? Which is what I'll illustrate from here. And then you should also be able to do some calculations that are supposed to be conveyed in the cash budget itself. What are those calculations? Amongst others, it involves being able to calculate the debtor's collection schedule. You must be able to do that calculation. I'll show you how to do it. Then you also should be able to calculate the creditor's collection schedule. I'll also show you how that that operates as well. Then, of course, in the cash budget, at the end of the day, we want to determine the balance of the cash, or what we call the cash balance in the cash budget, to say, okay, how much money do we have for this particular month after we have determined what we have received from our customers and what we have spent as a business, what is left at the end of the month. That's what we refer to as cash and cash equivalents. So obviously the balance can be the one at the beginning, and then you also have a balance at the very end of that month. All right. So it's very important to be able to do that calculation. So without further ado, let's begin to look into the purpose of a cash budget. Why do companies perform cash budgets? Number one is to plan the inflow of cash, as well as to plan for their outflow of cash from the business. So in other words, is to plan for their business expenditures. That's number one. Number two, to monitor and to control spending. Monitor and control spending within the business organization. And number three, it is to conduct, so it is conducted on a month-by-month basis. That's why it's a monitoring and a control process, because we want to be able to monitor how much we are spending, how much we are receiving, and what we are left with on a month-by-month basis. Sometimes we can also do it on a year-by-year basis, but at this level that you are dealing with, you should be in a position to do it on a month-by-month basis. Hence, you see in the format of a cash budget, right, you would have a column for, maybe for instance, the month of August, followed by the month of September, and then maybe followed by the month of October. And then some of the important sections that you would find in a cash budget would form part of what we call cash receipts. So what are cash receipts? In simple terms, cash receipts relates to all the monies which the business have received. So how would the business receive money? They would receive money either as a result of cash sales. So if they sell, so if the business sells products for cash, right? That's what would result in cash sales. Am I making sense? Can you hear me? Can you hear me?
Yes, I can hear you.
Yeah. So we're saying that with cash receipts, you'd have, or you'd find something called cash sales. So cash sales, it relates to all the money you have received when you sold products on cash basis. Does it make sense?
Yes.
Right. And then, but it's not only limited to that. So remember, I'm trying to explain what cash receipts is all about. And you also would sell some products on credit, but at some point in the future, you would expect to collect money from debtors, and that's what we call collections from debtors. there is a calculation that you'll be expected to perform as far as collections from debtors is concerned. And if the business had any other elsewhere, that's what will form part of what we call other cash receipts. You take all these added together to give you something called total cash receipts for the month. Does it make sense?
Yes.
Right. Then, of course, under payments, the business can spend money or they can spend on expenses on cash basis. So for all those expenses that they could spend money on cash basis, it will form part of what we call cash payments. So under cash payments, of course, because we are selling goods also, we have to buy the inventory somewhere. So it can be either we are buying the inventory or stock on cash basis. So that's what we call cash purchases. Cash purchases of trading.
Yes.
And then sometimes we may acquire or purchase inventory on credit. And if we do so, it follows then at some point in the future, we are expected to do the payments for those goods we acquired on credit. And that's where creditors collections, or creditors payments comes from, or payments to creditors, right? Payments.
Cash purchases and payments to creditors, they're gonna ask, they're gonna say the business, let's just say the business purchased these things for, let's just say, 1 million, and then they're gonna say this percentage is allocated towards cash, and then this percentage is allocated towards creditors. So okay.
Yes. So that's exactly what they would do. That's exactly how they'll do it. So that you can be able to allocate the amounts accordingly.
Okay, so also for I don't see vehicles. So with vehicles, they usually say the business purchased a vehicle, but they paid 20, let's just say 20%, no, 20,000 deposit, and then the rest is gonna be monthly installments. So how does it work? You put you put a deposit, let's just say they say they're gonna pay a deposit in August, and then for the rest of the months, let's just say they're gonna pay they're gonna say they're gonna pay a deposit, and then for the rest of
the year,
the payments they're gonna do they're gonna do monthly payments. So
so what you do in the, let's say for instance, if we bought the car or the motor vehicle in August and we paid a deposit of 20,000 rand, that deposit will be allocated in the month of August, 20,000 rand. And then for the installment, now it will be reflected from September going further. So you'll be indicating it as a monthly installment. Say if it's 7,000, so you put 7,000 rands as a payment for the motor vehicle in September, as well as yeah.
Okay.
Yeah, that's how you do it. Right. I'm trying to see why it's not opening some documents here. All right, it's fine. And then so if the business has incurred anything else as an expense, business expense on cash, for instance, salaries and wages, drawings, water and electricity, insurance, and perhaps if they had interest paid, it will all be allocated as cash payments. All right. And very important to note, depreciation, it's a non-cash item. So even if they give you the amount for depreciation, you don't reflect the actual amount for depreciation in the cash budget.
Yes.
Does it make sense?
Yes, it does make sense.
Awesome, awesome, awesome. Right. And then, of course, then we need to then get the total cash payment somewhere, which is what you would reflect there. And then the difference between the total cash receipts so the difference between the cash receipts minus the total cash payments, right? The difference between the two is what gives you cash surplus or a cash deficit. So you need to understand what is a cash surplus. A cash surplus is basically meaning that you have more receipts than cash payments. So you received more money than what you have spent. So, or what, yeah, than what you have spent. So what is left afterwards is what we call a cash surplus. That is if your total cash receipts is greater than your total cash payments. So say, for instance, this was 500,000, right? And then this was like maybe say 250,000. I'm talking of the cash payments. So it was 250,000. So what will be your surplus here? So you're taking the difference between this amount minus the 250K, which will leave you with 250K. So that will be your cash surplus. Surplus because your receipts are greater than the payments. But now I want to flip the table a bit. Suppose this was 800,000. Do you think you would have a surplus or you would have a deficit in this case?
A deficit. So you put brackets around it.
Yeah, you put the brackets around, and that would be minus 300,000. 300,000 rands, exactly. Something like that. Something like that. Right. There's a question paper I would open shortly so that we can do the practicality of it just now. Okay. It's gonna open just now. And then we look into it shortly. Right, but before I do that, I want you to understand something about collections from debtors, as well as payments to creditors. So let's start with collections from debtors, which is what I denoted as X over there. So this X, it's just a cross-reference that I've used here. So what happens with collections from debtors or debtors collection schedule? First of all, what you need to know there is you need to understand the instruction of creditors rules or credit rules. So in other words, they will tell you in the question, okay, of the total sales, maybe 50% of those sales were made on cash. So what does that imply about the credit sales, which were done, of course, to the debtors of the company? It means it will be collected at a later date in future. So we want to understand how are those payments going to be collected from the debtors? That's what I mean when I'm saying understand the agreement of collection of debt from the customers. So for example, they can tell you something like total sales are made up of 60% cash sales, and then the rest are made out on credit. So without telling you that maybe the rest is 40%, they will not, sometimes they will not tell you, but they'll just simply say of the total sales, 60% is cash sales. So what does that tell you about credit sales then? What is the percentage? Obviously, it will be 40%. Does it make sense?
Yes. Yes.
Right. So now, then they give you instructions on how that 40% will be collected from the debtors. So they might say something like 70% is collected 1 month after the month of sale, with a settlement discount granted of 15%. So it means if ever our credit sales maybe say it's 100,000, right? So from that 100,000, first of all, you need to take 70% from it. So you're gonna say 100,000 rands times 70%. And then you have to then give into account that discount. So what is 100 minus 15, young men?
100 minus 15 is
85.
85.
Exactly. So you're going to first of all say 100,000 times 70% times 85%. Why? Because what the debtor or the customer is paying, they are paying after we have deducted a 15% discount. So what is left? What is left? It's going to be how much? 85%. So the amount that we are receiving in that case, it will be 59,500. Does it make sense?
Yes.
Right. But then, of course, that was only but 70% of it collected 1 month after the month of sale. So what about the remaining 30%? How is it going to be collected? So they can then say 30% is collected after 2 months from the month of sale. You know, something like that.
Yes.
You know, just change this to make it 10. Yeah, 10%, and then the other 20%, maybe they will say it will be written off, something like that. So that's for your debtors collections schedule. So you need to pay attention to detail to say, how are they collecting the payments from their debtors, you know? So that's what you need to pay attention to. And then in the payment side, same story, understand the instruction of the creditors' rules, right? Understand the agreement of payments to creditors. So obviously, if you enter an agreement with creditors to settle them, you know, on installment basis, you need to know then how are they allocating. For example, if you've got a total purchase of raw materials amount, how do we allocate what was bought for cash and what was bought on credit? So they'll always give you that kind of information. So if it's 70% on cash basis, it follows then. And also, yes, was acquired on cash with 5% cash discount received, and the rest are made on credit. So now, what does that mean? It means, young men, that of the value that, so suppose if maybe the purchases was to the value of maybe 1.8 million. So if it was 1.8 million, we are saying how much out of the 1.8 was paid for cash? It will be 70%, isn't it?
20%. Yes.
Right. Now, if you say 1.8 million times 70%, it leaves you with 1,260,000. But that's not the answer. Remember, there's a discount that you received. So it means instead of you paying 100% of the 1,260,000, if you take out the 5% from the 100%, how much are you left with? 95?
I don't know, but 95%, yes.
Yeah, you'll be left with 95. So the 95
So,
is what you'll be liable to pay.
Okay.
Yeah. You wanted to ask something?
No, what I wanted to ask is about the bad debt. So if in the debtors collection, in bad debts, the writing off. So
Yes.
let's just say they don't give you debts column in the thing. So where do you write the amount, or you just leave it?
No, you just leave it because it wouldn't have been received in cash.
Okay.
Yeah. Yeah, you don't write it, you don't indicate it.
Okay.
Yeah. All right. And then okay, yeah, so I think I was illustrating with the examples here. Right. So then obviously if the cash purchases was 70%, how much was the credit purchases then?
30%.
It will be 30%. And guess what they'll do? They'll tell you how the rest, or how payments to credit is collected 1 month after the month of sale, and they maybe say 10% settlement discount is received, and then the rest is collected 2 months afterwards, you know.
Yes.
Right. So now I want us to go to the question. I think that was just the theory I wanted to touch on. So I want us to look at a practical question. Is it fine?
It's okay.
Right. So let's get ready for that. So now I want to take you to that question paper that I sent you on the group so that we can do the discussion properly. So you know that they always give you formats, isn't it?
Yes.
So even on this one, there was format. I'd already answered the question anyways, it's here. but I wanted us to look at the actual question, right? So, because it's taking too long for it to open on my side, can I ask that you can read it from the group while I wait for my PDF to open? I don't know why it's taking too long, but let's open from your phone. So let's look at the question. Read the required part 1.1.
Provide 2 different reasons why is it essential for a business to prepare a cash budget.
Exactly. So why is it essential for a business to prepare what?
Cash budget.
Right. I did give you those reasons.
Yes.
You see there? There they are.
Yes.
Right. And then the second question, what are they saying?
1.2, complete the following for October and November. 1.2.1, debtors collection schedule. Some information in the answer sheet. 1.2.2, the cash budget for October and November. And then 1.3, proceeds from sale of an old delivery vehicle can be utilized for other things to improve the business. Refer to B, additional information under number 10. Give 2 suggestions.
Yes.
And then it gives us the cash budget for September 2022.
Exactly. All right. Let's see. Right. If you scroll on page 10 of that question paper, you would see something there, the format.
Page 10.
Yeah. On
Page
that.
10.
Do you see it?
Which one is it? Maybe I'm seeing it, but I don't know the page number.
Like if you scroll down.
Down.
Yeah.
On the answer sheet.
On the answer sheet, yes. I wanted you to see the answer sheet in
Yes, okay. The 1.2.1.
Yes.
Yeah, it shows
that's the one I want.
Collection schedule, yes.
Because I don't know why it's this thing is refusing to open on my side. Been trying to open it, but anyways, all right. So do you see that in that format that they've given you? In fact, but when we connect again, I'm gonna restart the device and then try to reopen those questions. In fact, let's connect again just after 5 minutes. I want to restart my laptop.
Okay.
Yeah. So that we can maybe display the question paper on the screen. Okay. So you connect after, let's just say after 5 minutes.
Okay.
All right, sure, buddy.